Globally, we see real estate prices rising to new highs all the time. Properties are scooped up off the market faster than thought possible. Money is flowing around the system like it's the subprime party time all over again. What could possibly make this reverse course? You came here for the truth, so let me unveil that for you. Today we are going to look at real estate prices. Let's begin. Global House Price Index. When you see that the US is at the highest level it has ever been, and it is at the bottom of the list compared to these other nations, you know that you have a very serious problem. Taking Canada, for example, the prices right now in cities like Vancouver and Toronto have become officially unaffordable. What has pushed these up to this level, whether it's Britain, Australia, New Zealand, or the rest? What has caused this to happen? Looking at the nominal house prices, you can see that these different countries have all had the same situation occur, and that is the increase in their housing prices. Yes, there have been setbacks along the way, but what we can see is that they have all risen. The question which some economists forget to mention is why? Why have they risen to these levels? Is it that wages have increased in all of these countries? Real wages, that is? Is it that there is less and less and less availability of homes in these particular countries and the cities? Is it that liquidity is drying up, and as a result, people are scrambling to find that next asset? Where can they put their money? And it's real estate where they're putting it? Is it perhaps central bank intervention? Low interest rates, quantitative easing, buying bonds, buying corporate bonds, doing TARP type like stimulus from the governments, and so on. I'd have to go with this last possibility, that the central banks and the governments are involved in this entirely. That's what's going on here. And what exactly is going to make this head for a downturn? The divergence between actual household income and income needed to buy the median price house. This is the most important factor to determine, is real estate overvalued, undervalued, or fair market? Even this is the US, okay? Even in this case, you can see that prices are unaffordable. And this is in even the most extreme situation. Reading their bottom line here, most of the largest US cities are completely unaffordable to the typical end user shelter buyer with a 10% down payment. 10%? Wow. That's a big down payment for many. They will not be able to afford that. They don't have $20,000, $40,000 or more. Absolutely not. So where are they going to get this? Well, I've already talked to you about the schemes that are available. But let's just take some of these cities, for example. Here you got LA, you got San Fran, New York, San Diego, Miami, all the major cities that you know. And you look at the national level, -6. There's no way that the average person will ever be able to afford this unless something changes. Unless, look at this, for example, Detroit. Housing extremely cheap, yet they can't afford it. Why? Because the wages are low, are too low, far too low. So what's going to happen? Well, I think what's going to happen is everybody is going to get a raise. All of your employers, they're going to tell you Monday morning, you got a raise. No. Let's come back down to reality. Everyone's going to get screwed over. And maybe they're going to decide instead of buying a home, they're going to rent. How does that sound? Well, give me a moment here. I'll show you. Ratio of trailing 12-month averages for median new home sale prices and the median household income. This is the ratio here. Worse and worse and worse. And this is the US, which is laughable compared to some other areas. You have no idea this ratio, how bad this is in areas like Canada, Australia, New Zealand, and the UK. Just look at this. This is going from 1967 to 2016. As the years go on, your house is much more expensive. Not just the price that you see, but the wages. I talked about this in my first book, actually. Showing you an example. 1970, average house, let's say it was, I think the example there was $27,000. $27,000. Average, the median housing price, I believe it was. And you compare that to the average house price today, $270,000, $300,000, whatever it might be. And you realize, okay, that's significant, 10 times. Looking at your wages though, they've only increased, if my memory serves me correctly, let's say 4 or 5 times. So there's no way that as these assets continue to increase in price that the average person will be able to afford it. Now you might be thinking, well, I own the asset, so therefore my wealth is increasing with it. And to some degree, I could see how that's true. What I'm talking about is the average person. And the average person, if the average person, not you, but the average person is getting screwed over big time, then we have the domino effect. And nobody ever wants to think about that because they're always thinking of themselves. But you have to understand the way the domino effect works. It will affect you, perhaps indirectly. This is key. Share of disposable income spent on rent. Highest ever. Highest ever. People are now spending the most on rent that they ever have. Think about it. You can't afford a home. What do? Well, you got to rent. You got to live somewhere. So you decide to rent. But now rents are the most expensive they've ever been. How are you going to afford it? What are you going to do? Well, why don't you do what they do in the Netherlands? Heading toward a mortgage crisis in the Netherlands, debt on mortgages with irregular debt payments 2018-2043, and to just tell you what's happening here, I don't even want to focus on what's in this chart. I want you to know something. In the Netherlands, Amsterdam specifically, I happen to know this, there is a certain percentage that you may find interesting. My quality drawing here. 106. 106%. What is that? That's the amount that you are able to finance on a property. 106%. So you can get the entire purchase price plus 6% for your closing costs, maybe a little bit of renovations. How can that possibly be sustainable? How's it possible? How can that not lead to a crisis of too much debt? What are they expecting? What is that country expecting to happen? That's what I want to know. The central banks, these governments, are either ludicrous, they're crazy, they're idiots, or they are doing this on purpose. That's the only possibility. What I'm seeing right now is that people are highly indebted, and eventually this will have to catch up. Whether it will happen tomorrow, next year, 10 years from now, I don't know, but they are pushed to the edge. I read an article actually about how homes are now flying off the shelves in the US. They're only staying on the market for 3 weeks. In Toronto, I could speak for myself here, seeing that a lot of properties end up leaving the market after days, and at the peak back in April, it was literally within the hour, 2 hours, whatever it took. They would be bidding immediately. They would say, at this time, we're going to open the bidding. People would immediately start bidding, and they would have to be present at that moment, and they would have a done deal right on the spot. That's called a housing bubble. That's a frenzy. That's a fiasco. That's a disaster. That is the inevitable failure. But there will be a time when housing prices will go up again. The question is, how long does it take in between that time that it falls and the time that it rises? Because most people, and this is where I think that people are looking into any asset wrong. When you look at an asset, it should provide you with passive income. That is the number one strategy. Passive income is important. So when you look at a stock, if you're going to invest in a stock, which at this time I don't recommend, but you want to have those dividends, because if the stock price goes down, at least if they still pay you the dividends, are making those dividends. Same with the housing prices. If housing prices go down, but you're renting out that property, you don't really care because the income is coming in, it's covering the mortgage, you've got nothing to worry about. As long as that place doesn't stay vacant for any period of time, you'll be okay. That's the key. That's what we need to realize. Not appreciation. That's good. Appreciation is good, but don't rely on it, because ultimately the people that want appreciation tend to be the ones to pull out their equity, and that's very dangerous. Global median inflation series since 1209 and 1900 on the right hand side. Looking at this, I just want to show you this. Over time, we enter the exact same situation. Central banks like to debase the currency. As a result, you have rising prices. Central bank assets, inflation adjusted to June 2017 price levels. Look at this. Through the charts, whether it's the Fed, the Bank of England, ECB, and so on. You'll see these printing now. Last statistic I saw was about $15 trillion. Not sustainable. This is the reason why housing has increased. You drop interest rates down to the bottom. You have bubbles appearing everywhere because of all the quantitative easing. You can't control it anymore. 15 trillion has been printed so far, just that we know about, not even considering, for example, the 16 trillion that the Federal Reserve printed. It's just going to cause a disaster at some point. That's just the way it is. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my books, The Money GPS, and my new release, Global Economic Collapse, even more informative. Links are in the description below. Take care.